You are watching Daily Market Pulse. Today is Saturday, May 2026. If you want a clean daily read on macro and market risk, subscribe for the next briefing. GameStop's bold acquisition plans and a looming private credit crisis are shaking up markets. Here is the framework for today's briefing. GameStop's M&A ambition, exploring Ryan Cohen's strategy and its impact on GameStop's Bitcoin holdings. The private credit crisis, understanding the $1.8 trillion warning and its potential market shockwaves. Geopolitical commodity supercycle, analyzing the shift towards gold and hard assets amid global tensions. Bitcoin's dual narrative, institutional adoption versus flight to hard assets, where does BTC stand? Fed transition and inflation watch, key economic data and leadership changes to monitor. First up, a surprising move from an unlikely player. Good morning. We're starting today with a headline that's turning heads. GameStop is reportedly preparing a massive bid to acquire eBay. CEO Ryan Cohen has a bold vision to build a $100 billion retail conglomerate, and he's looking to use GameStop's significant cash flow and its substantial Bitcoin holdings as key financial levers. This isn't just about retail anymore. It's about transforming GameStop into a financial powerhouse. The company has been shifting to a high-margin collectibles model, generating impressive free cash flow and holding nearly 5,000 Bitcoin. Analysts suggest that while eBay is a target, a smaller acquisition like Etsy might be a more efficient path to achieving Cohen's valuation goals. This move signals a major strategic shift for GameStop, moving from a distressed retailer to a cash-generating financial vehicle focused on scale and acquisition. It's a fascinating development that reinforces the narrative of institutional adoption and corporate balance sheet diversification for Bitcoin, providing a fundamental floor for demand. But this corporate ambition comes with a stark warning. Now for a serious warning that could impact markets significantly. Experts are sounding the alarm on a deep structural crisis in the U.S. economy, specifically within the $1.8 trillion private credit market. We're talking about the potential for massive write-downs, with some predicting write-downs to zero and a looming liquidity crunch. This is happening while the Federal Reserve is deeply fractured, with an 8-4 split on rate cuts. Incoming Chair Kevin Warsh is expected to pivot towards easing, but the question is, will it be too late? Commercial real estate faces a $5 trillion refinancing crisis, and consumer spending is collapsing despite strong corporate earnings. This K-shaped recovery is masking a real middle-class recession. The erosion of trust in the U.S. dollar is also evident, with central banks and even crypto giants like Tether accumulating physical gold. The market is pricing in a soft landing, but the real economy might be entering a credit contraction. A shift to rate cuts is inevitable, but it might not be enough to prevent significant asset devaluation. In this uncertain environment, investors are looking for tangible value. As geopolitical tensions escalate, particularly with the ongoing Iran conflict, a significant shift is happening in global markets. We're seeing the start of a commodity supercycle, driven by a global push for rearmament. This means companies that produce raw materials like lithium, tantalum, aluminum, and steel are seeing double-digit price increases. Professor Steve Hanke is forecasting a secular bull market for gold, with prices potentially reaching between $6,000 and $7,000 an ounce. This is a major pivot away from high-tech assets as investors seek tangible value in hard commodities. The U.S. is facing critical shortages of munitions and raw materials, highlighting its strategic vulnerabilities. The UAE's exit from OPEC also signals a change in production strategies due to war risks. This trend suggests a long-term move towards hard assets as a hedge against inflation and geopolitical fragmentation, making gold and commodities a key focus for investors. So, where does Bitcoin fit into all of this? Bitcoin is currently trading above $78,000, continuing its strong performance from April. This rally is supported by two key themes: corporate treasury expansion, like GameStop's strategy, and organic demand from emerging markets looking for a hedge against their local currency devaluation. These factors create a strong fundamental floor for Bitcoin. However, the market must also navigate potential liquidity shocks from the private credit recession and increasing competition from gold during this geopolitical rearmament phase. The narrative is shifting towards hard assets for safety, which presents a headwind for crypto. While Bitcoin is positioned as a long-term hedge against fiat erosion, short-term volatility is likely as capital rotates between risk assets and physical commodities. The Fear and Greed Index remains in fear territory, indicating that caution is still prevalent despite the price gains. We'll be watching to see if Bitcoin can maintain its momentum as a risk-on asset or if it will be increasingly viewed as a speculative play compared to traditional safe havens. And keeping a pulse on the central banks remains paramount. As we look ahead, the central bank landscape is a key focus. Jerome Powell's term as Fed chair officially ends on May 15th, although he will remain on the Federal Reserve Board. This transition comes as U.S. inflation accelerated to 3.3% annually in March, a notable jump from 2.4% in February, with core CPI at 2.6%. In Europe, the ECB is grappling with stagflation concerns, holding rates at 2% following the Iran war outbreak. This inflationary pressure is a critical factor for the Fed's next move. Markets have been rallying, with the S&P 500 and NASDAQ hitting new records, but there's a historical caution around May performance. Analysts are watching for signs of fatigue in the tech rally. The upcoming April CPI report on May 12th will be crucial for signaling the Fed's future policy direction. We'll also be dissecting the FOMC meeting minutes released on May 9th for any subtle clues. So, what does today mean for you? It means staying sharp. GameStop's moves show corporate cash is being deployed, potentially boosting Bitcoin. But that private credit warning is serious. It could mean less cash overall. And with gold and commodities on the rise due to global tensions, diversification is key. Keep an eye on those Fed signals and inflation numbers next week. Thank you for your attention, and we will see you again tomorrow.